So Roth Capital, the investment bank that is analyzing Tattoo Chef, is going to have a webinar next Friday where they talk about where they see the company going in the next couple of years. At the moment, they've set a stock price for the company at $27, and that's what we're going to talk about here today on the PlantStock channel. If you're new to this channel, welcome. If you're not, then welcome back. And if you haven't subscribed to this channel yet and you're interested in the Tattoo Chef, Beyond Meat, the Very Good Food Company, and other plant-based companies out there, make sure to subscribe and don't forget that bell button. And if you're keen and up for it, I would truly appreciate an early thumbs up since it does help spread the video to more people out there. Thank you, folks. I truly appreciate your help. And first of all, let's take a quick look at the stock chart. Ticker symbol TTCF in the NASDAQ. Today is actually trading a little up, about 1%. Look at these last 5 days. It's been on a roller coaster for sure. Rock and roll, man. So first of all, what is Roth Capital? Well, it is an investment banking firm that, according to their page, are dedicated to the small cap public market and is headquartered in Newport Beach, California. And basically, when it comes to Tattoo Chef, they're one of the few analysts. So yesterday evening, I got this mail from Roth Capital Partners that they are holding a webinar on Friday, June 11th at noon with Mr. Sam Galletti and Creative Director Sarah Galletti and Stephanie Diekman and the Chief Growth Officer. And during this webinar, they're going to talk about TTCF's key growth initiatives, long-term margin targets, and recent acquisition. So make sure that you watch that or watch it later when you have the opportunity, folks. But already at this point, we're getting some information from them, and it is that their valuation of the company, when it comes to the price target of their stock, it is at $27. And that's based on a 6 times of their 2022 revenue, which we're going to discuss as we move on. And there are some factors that could impede the shares from reaching that price target. And according to Roth Capital, that is the competition, that there are many well-funded competitors, contamination. TTCF's manufactures products at 2 facilities and relies on co-packers. Key customers, TTCF's top customers represent a majority of its revenue. And corporate infrastructure, TTCF will need to boost its corporate infrastructure controls. All right, we'll probably talk more about that when we've taken a look at this webinar. They also present some risks here to think about. It's important to be nuanced, right? And one of them is that it's an immature business model. And they basically mean that the brand has only existed since 2017 and hasn't been tested in a real recession yet. Well, it might be happening at the moment. We'll see. Corporate infrastructure, Tattoo Chef's internal controls may be underdeveloped as compared to other publicly traded food companies. The company was bootstrapped and had limited capital until recently completed the SPAC transaction. That might have been true then, but we know today they really have a lot of money. And we're going to talk more about that. Manufacturing, Tattoo Chef relies on 2 primary processing facilities to manufacture its products. That's not completely true anymore, as we know the New Mexico deal with 2 new facilities there. Competition, Tattoo Chef competes with many food companies that are better capitalized. Well, again, I think depending, what do they mean with food companies here? I'm guessing general, because when it comes to plant-based companies, I think they're doing pretty well. One of the best out there, actually, be it considering their cash balance also. But if they're talking about, obviously, the larger, super big animal agriculture business, then that's another thing. But I guess we'll find out more when we hear the actual webinar. So also in the letter, we got this document that kind of shows what they estimate in the coming 2 years. And if you guys want this document and if you want the letter, let me know down in the comments and I'll give you a link to this Excel document, right? So if we take a look at the document, when it comes to their sales, their revenue, we know already 2019 and 2020, almost 150 million. And we just talked about the Q1, which was about 53 million. If you haven't seen the video, take a look at that. And when it comes to Q2, yeah, we don't know what they're going to get, right? But according to Roth Capital, they expect them to be around 52.1 million. So a little less than Q1. And first of all, I'm not sure that makes sense, but it depends on the way they think, right? Because the only thing that could make sense is that during this period here, we're coming into the summer months, right? And restaurants are beginning to open up again. People are going to have vacations, so they might not be inclined to buy as much frozen food. So that's the only thing I could think about why they actually put this lower here. But well, we'll have to wait and see, right? But then in Q3, they expect it to be higher again, about 65.5 million, and then Q4, 68.3. So 50% to 60, and then 72.5 in growth. And for the whole year, they are expecting it to be a bit higher, what the company itself actually stated. And as we've talked about before, for 2021, before the new facilities, right, they do expect 222 million, and now Roth Capital is talking about it could be closer to 240, right? And if we take a look what they believe for 2022, and that's basically what we get, Q1 76.4 million, Q2 75.6, and then 85.2 and 88, and in total 326%. And that's compared to that they expected themselves, the company TTCF, 300 million. So a bit more there, right? About 26 million more is what they believe. And they do believe that the company is going to start growing a bit less here when it comes to the sales. So 45%, both periods here, and then 30% and 30%. So we'll have to wait to see what actually happens. And in this document, they have other details here that you guys can take a look at yourself. That we see. There's quite a lot of old news here, I would say, but there are some things that are interesting. Here you actually do see them trying to compare it to other companies here, like Beyond Meat, Boston Beer, Vital Farms, Laird Superfoods, some of these companies that actually have plant-based food. So that's something also to take a look at. So in conclusion, what do I feel about this? Well, I would say that it does feel that they're a bit conservative, but it might be a good idea not to hype a stock all the time and just believing that it's going to fly to the moon. But I do believe it will with time. But still, and being at a half a year ago, they talked about that the stock would land at about $26. Now they've gone up $1 to 27, and they talked about being 6 times of the revenue for 2022, which they do expect to be at $326 million. And for me, I still feel that having it 6 times revenue and just 1.5 years from now, right now it's 10 times, right? So it seems kind of low. This is still a disruptive growth company. So I do expect that they could keep that 10 for years to come, actually. So, but again, it's their choice to be conservative. I'm not sure. What do you folks feel? Let me know down in the comments. And personally, I feel that their revenue seems a bit on the low side, especially if we go look at 2022, 326 million. Yes, the chef themselves thought it would be around 300 million. But the difference here is obviously this is a half a year ago before they got the new facility. I mean, those 2 facilities in New Mexico are expected to make about another $200 million in revenue. You know, not including anything else, right? In themselves within the next, I think, 2 to 3 years. So that makes it a bit weird that they wouldn't believe them to have more than another 26 million in a 1.5 year from now. And the same could be true for the end of 2021. Not sure yet. It might take time to get that business going, right? But at the very least, that it shouldn't be more here, that to me sounds a bit strange. But to be honest, to give them the benefit of a doubt, this is just a preliminary, what we found out now before the webinar, right? They might be saying other things here that we don't have the information about, right? So we don't know. So we have to wait to see now next Friday. and hope that they disclose a lot more information. But they do seem quite conservative. I'm not saying that has to be a bad thing, but around $26 to $27 seems kind of low. And especially if we're talking about fair value. But we'll have to wait to see again. And again, folks, if you want access to this Excel document, if you don't already have it, give me a comment down below and I will give it to you directly. Well, folks, I truly hope you got some value from today's video. And if you did, make sure to smash that like button. And if you want to get more information regarding the chef or other plant-based companies out there, make sure to subscribe and don't forget that ever important bell button. Thank you, folks. I truly appreciate you. And as always, do not forget, this was not financial advice. These were just my own opinions and thoughts. It's important to do your own due diligence and invest safe. Have a wonderful Friday. I will see you tomorrow and peace out.